But go on.
That's what I was going. That's exactly what I was going to say. Because right now, the institutional investor, which includes Wall Street, they represent, if I'm correct, I think like nowadays in the current market, I think there are something like 50 to 60% of the whole asset values. So back then, in the 50s, the retail investor were the majority of the money. Now the majority of the money is institutional investors. And it's even better. It's even better because we know that institutional investor, the overwhelming majority, for various reasons that we already start to explain, they cannot look long-term. They have to look short-term because otherwise the money will go to another pocket and then they're going to lose. So they have no choice but to look quarter for quarter every earnings. Of course, they can't have long-term success if they are like short-sighted like that. And that's our biggest advantage, as exactly like Warren Buffett and Charlie Munger. We, by being patient and being able to look long-term, and most importantly, and that's not an easy job, be able to analyze this company. And whether we like it or not, that does require more knowledge than before. But we do love these things to learn, and we have our edge with that knowledge, and patience leads us to better results. And like all market, you need the edge, and this is our edge in this. I would not even call it value investing, because value investing for me is more like the Graham style investing, and it's like you buy on undervalued stock and then you sell when they are at the fair value. But this today, as many as exactly Charlie Munger, Warren Buffett, sorry, Charlie mix, and Warren Buffett said. It's now much more interesting to buy just normal buy at normal price fantastic company than the reverse. And that requires more skill, and that's why there is only people like us to make money in this new economy, if I can say. And the thing is going to be, and I think that my guess is the future is going to be more and more like that.
It definitely will.
Will require more skills, like we are learning to stay on top of the game in the quality investing world. And also the institutional investors, they will be even more short-sighted, because the always competition between each funds who wants to have the money, and so we have to be even more short-sighted. So the just to say, the summary is like the future is great for us.
It is, and also I think it became quite mainstream to invest in index funds. That means the index funds themselves are much higher price than the sum of the companies they own. Like, right? So if you buy an ETF that consists of a stock worth $1 and another stock worth $7, you would expect it to be $8 for one ETF, but it's not $8; it's like 15. And like, who could foresee this? And I read this essay called "If You Can," written, I forgot the name of it, but it's basically the message of it is, if you can delegate 5 minutes a year to your investments, take your annual savings and put that in an S&P 500 index, and do this for 50 years, you will be just hugely successful and very rich. Well, I think it was good advice 50 years ago when this wasn't mainstream, but today it is mainstream. And these ETFs are so bloated, you are forced to look for these companies yourself, and you are forced not to diversify. And also the diversification issue, it's like so fun, because can you think of another profession that would require or recommend diversification from you? It's like, I'm getting married in a month, right?
Congratulations.
Thank you. Would you agree? Would you tell me that, nice that you picked this wife, very good pick, but just to be sure, pick 15 other wives so that you can diversify?
I'm sure your wife will love the idea. Of course, it doesn't work in real life. The thing is, as Warren Buffett says, diversification is an edge against in your ignorance. It's to protect against ignorance. And if you know nothing, it's still better to be on the SP 500 than trying to buy everything at Tesla or Apple when everything is at a bubble price. So I do think this index, they serve a purpose, but I do think we are not the right customers for this index because we know better some fields that we can have better results than just putting on the SP 500.
Yeah.
But beyond all of that, I would even say that the main reason why I'm interested by investing is paradoxically not for make money, but because I love the field. So even if I was underperforming the SP 500, I would still be interested in the subject. Maybe I would probably invest less because it's not. But yeah, it's like a craft, a skill, something you want to learn and mastery. And that's what drives me into this world. If we were here only for the money, I don't think we would not be successful because you would not read that much amount of books if you just want the money. There's other ways to make money, first off. And second is, we are better at something very specific because we dig very deep into it and we know more than the majority of the other actors. And not only we know more, but we can do things that others cannot do because of their requirements, because they have to be short-term and stuff. So because of these edges, we can find our way against the big boys.
Yeah, definitely. And how diversification can help you, the only way I can think of is that I bought the company I bought this year, so 2022. I'm going to hold it, I don't know, till 2050, let's say. I don't care what it does in the next 30 years with the share price. I care what it does at the end of this period. And diversification, what it does to you is that it minimizes the loss in the years you don't even want to sell it anyway. So you know, it's good for an emergency fund, right? It's good for a fund that you want to be able to take money out of any given moment. So that's why you should diversify a lot, because you're not likely to have a huge loss on any given year. But that's not what I need, and I'm not investing money that I require to have. It's
Yes, the more you know about a company or something, the less you need diversification. The reverse is true. The less you know about something, the more you need diversification. You marry your wife because you know her very well. You would not marry someone you don't know anything about. And if you had to pick your wife between 10 people you don't know, then maybe you would be like, okay, maybe I should take 10 because I know nothing about none of them. Hence it's the relation between inversion, between knowledge and diversification. The more you know, the less you need it, and the reverse.
Yeah, definitely. It blows my mind that when you're at a university and a professor says that diversifying is required, I look around and nobody laughs, and it's
I would, because I have a kind of a small insight of how the academic teacher work, for having been myself shortly one. I can tell you that they have no choice. They have a program. It has to be approved by peers. So even if one of them is smart enough to discover that this is bullshit, as long as not everyone simultaneously accept that, okay, it is bullshit, they have to continue to perpetuate something that is wrong. And especially in a field like finance, contrary to engineering, where you cannot prove right or wrong with a mathematical formula and prove something. It's one of the very few fields when you can have bullshits that are perpetuated for decades until there is a big paradigm shift, and it happens. Like the finance industry is growing, but just the academics, they take decades to make changes. And as one discovered stuff many decades ago, they probably need several other decades until it becomes mainstream. But the thing is, with mainstream people, it's going to switch from one day it was only one way, and the other day it's going to be like quick, another switch to something else. So it's not going to be progressive. It's going to be like pop, and immediately to the new paradigm. That's how human evolve in this kind of fields where they do have a strong peer connection. But I guess that's gonna be all for that specific video, because we're gonna run out in 1 minute of,
of
time.
Do you want another link, or do you
I guess Yeah, maybe we call it a day, and I would love to have you can send me in private your stock name so I can investigate and have understand better your Chinese stock, and then maybe we can do a video next time where I do have the time to have an opinion about the stuff, and you can tell me what you think about it, and we can enjoy sharing your views, because I assume that you made a lot of research on it, and I would be delighted to have this kind of talk with you.
Well,
maybe you're gonna.
If it's okay with you, I would rather just give you the introduction to that stuff myself, if it's okay.
Yeah, of course.
Yeah,
okay.
and share doing that. Yeah, I have to start a new video now because it's really counting out the
Yeah,
seconds.